Good afternoon, all. Camelback Trading 2724 coming to you this Wednesday afternoon, April 29th. We're looking at the last 2 days on the market profile of the SPY ETF. And boy, a tale of two different days, two days that did some strange things. Yesterday we had a trend day down, but ended 10 wide with a B shape. And we held the singles. Today, we gap higher, fill it right away, fill the single prints from yesterday. Then we absolutely ramp up and rip up all morning into the afternoon. We have a chance for six sets of single prints. And they all get filled. It might be the most I've ever seen filled in one day. I know I remember 5 a couple of times, but we had a chance for 6 attempts at a trend day. Only to give it all back after the Fed, right? We got all the week longs out, flushed them all out, took out all the singles. Then we go back up, make a new high, have a chance for a price spike if we close above H's high, which we do not. We close below it by chance. And we go out with a poor high. We one tick L's high. We don't even get the price probe. I had a good day, except I made a poor choice in M period. Because after we made, I'll go over all the trades in a minute. But not only don't we have any single prints, we only end 6 wide. So after everything was said and done today, no single prints and only 6 wide. Yesterday, 2 sets of single prints, 10 wide. Bizarre price action at its finest. B-shape long liquidation, P-shape short covering. So both these days, we have not had any long-term money in it. We thought we did yesterday in B, C, and D, but obviously was not, and today definitely not. As far as trading today, I had a good morning, and I really did go against the trend. Now, I know people are going to say I'm wrong, but unless you have single prints hold, it is not a trend day up as far as I'm concerned. Doesn't mean they're wrong. That's just how I like to look at it. So every time we made a new high, in B, C, D, and E, I faded it and made money on all 4 of them. I knew something had changed, though, in F period. First off, I went to go get lunch, which was a good thing. That's number 1. But number 2, things did start to change, right? We never saw the opening again after B period. We kept seeing the initial balance in C and D, but we never saw the opening. And then in E, that even changed. We never even saw the initial balance. So something was changing. So I stayed away from F, G, and H. Just watched it. I didn't get long. I hated the price action. The Fed was speaking in a couple hours. The odds of a trend day holding the day the Fed comes out with an announcement and has a press conference, I think is basically 0. I've never seen one. Now, when the Fed made their announcement, we did still have some single prints. Not many, but we had some, and it finally filled. So, a lot of weird things. So, again, I'm not going to always know what's going on or why it's happening. So, I stayed out of it. Now, I know a couple of people in the room was short. They had done what I had done, and they continued to do it. But luckily, they persevered, and most of them got it all back, if not more, when I and J flushed out. Yes, the easier trade was from the long side. One-time framing up and higher value. There's no doubt it was. And I was telling my room that. That doesn't necessarily mean that's what I'm looking at or what I'm doing. Right? Everybody's, big boy. They have to do what they feel is right. I did tell them the reasons I did short B, C, D, and E, and they all worked. I also did say that something had changed here and I wasn't going to get involved. Then after that, I didn't do anything to M period. I was looking for an afternoon pullback low. Now, J certainly would have been it, but the problem was the press conference was starting just about as J was finishing. So J got down and then it finished. I'm not sure where it finished, but I would have liked to have taken along, but not when questions and answers are going to start coming, because that's when the usual volatility happens on FOMC day. Well, it really didn't. We basically traded inside K. It took it out. I guess I could have taken another trade here as K came down, but the press conference again was still going on. So I didn't do anything. Again, I don't care if I miss a trade. What I did do, which was silly, M period, I thought for sure would at least price probe. This really didn't have anything to do with the 350 algo anymore. I was looking more for a price probe. So when M came in, I bought some pretty decent size 295 calls that expired today. Well, obviously when 350 happened, it punched me in the face. So I gave back my whole day and more in one of my accounts. What I did do is take a put position after that of good size that expires Friday and got back everything I lost. Should have did it one more time. I would have gotten back my entire day and more. But that's fine. You live and learn. At least I didn't lose. I didn't lose any money in that one account after giving back everything I was up, which was good in that account, and a lot more. So again, that's why staying away from M period for me is generally a good idea. All right, let's go over destinations for tomorrow. Upside. First one will be today's high of 294.88, and it is a poor high. Then we have 295.07, that 9 wide from March 6th. Remember, I've been saying that for a while. That was our next destination, the upside, and there's a void in prices. Well, we almost got there today. Above that, we don't have anything until 298.78 daily high, and then filling a gap at 300.01 from March 6th, 123-point gap. For the downside, we have today's afternoon pullback low of J period, 292.51. Then we have today's low of 290.41, 287.46, which was 10 wide from yesterday, and then 285.40, which was yesterday's low. Now let's go to the charts. Okay, 1 day left to go in the month. So unless the bulls have a horrendous day tomorrow, we are going to end above that trend line of 278. So that's one feather in their cap. Second feather in their cap, if they close not far off of where we are today, well, we have an inside month. It's going to make it a lot easier for them to come out of it to the upside. There's no guarantee it's going to come out to the upside just because we're near it. But the odds would be better. Look at this, right? There's December of 18. Here's January of 19. Inside month, we came out of it and really never looked back the entire year. Powerful stuff, right? Again, here's another one we had. I didn't realize that. February of 16. Came out of it to the upside. Up, balance, up, balance, up, balance. Never saw it again, right? Well, here's one that we came at it to the upside but failed, but not by much. So it's pretty powerful things, the inside month. It's the longest of the time frames. Weekly. Weekly is impressing the heck out of me. One time framing up 5 weeks, and we're getting distance away from these 3 weeks, and especially the last 2 weeks. Inside week up. Third time this week we did it. Well, this time's the charm, right? I said, is it strike 3 or is third time the charm? Well, right now, we're $6 above last week's high. So if you went with it, again, nice trade. And then in the daily, I kept giving the buyers the benefit of the doubt, right? I said I'm calling it balance to up because even though we kept coming back into the balance, we're one-time framing. Well, now to me, it's firmly up. One-time framing up, 3 days, we're up. So the weekly is very healthy. The daily is very healthy. The monthly, although it's one-time framing down, is set to have an inside month, and we'll see what happens when we come out of it. The next best big destination is filling that gap at 300.01, and that's basically exactly where the 200-day moving average is. So whatever you want to believe of where the market should be, doesn't matter. We got to trade what's in front of us, and right now, this market is continuing to go higher. I hope you had a good day trading. Have a great night, and we'll speak prior to the opening tomorrow.